Now that we have the first cut by the Federal Reserve, where do we go from here? How does the year close out? What does 2025 look like? No one has a crystal ball in that regard. But what the consensus is that we should get another 50 basis point cut by the end of 2024. Is that one cut in December? Is it 25 and 25 November, December? That's to be determined. But the overall trend is that, again, that cycle is a downward trend. I think ultimately the Federal Reserve over the next 18 months or so would like to get the rate down at least 1.5 points, if not further. So that's all welcome news for current homeowners. One of the things that we've talked about in the past with people that have owned homes, especially since 2020 before, is that they have a wealth of untapped equity in the home. So this equity can be used to consolidate debt, do home improvements, buy additional properties. All that stuff is on the table, and that equity can be accessed in many different ways. However, people over the past 2 years have been reluctant to really touch that because of where the rates have been. So with the easing of those rates is going to create an opportunity for people. Now, those game plans are tailored specifically to the person's needs and goals. So that's a conversation. But homeowners will have an opportunity here moving forward to take advantage of that equity that has been restricted just because of the cost of accessing it. If you are somebody that is looking to get into homeownership, again, the affordability is going to improve for you. So rates high, payment high, overall cost high, your affordability is low. As that rate comes down, the payment on the mortgage comes down. And so that becomes more and more affordable as that rate drops and drops and drops. So just for example, if your rate was 7%, and let's say that correlates to a $3,000 mortgage payment, as the rate drops to 6.5%, now it's a $2,700 mortgage payment. And then it goes to 6, and now it's $2,500. And so again, as that goes down and down, the amount of house that you can afford will increase and increase and increase. So there's going to be opportunities for home buyers as rates continue to come down on that cycle to get into the market. I also think in 2025 that the relief in interest rates will help with inventory. I'm in the Northeast. Inventory has been terrible for the past 18 months at least. I attribute a part of that to mortgage rates being high. What do I mean by that? Why will rates decreasing help people that want to sell their house? Well, most people that are selling their house are buying a new house. If you're a young family, you bought a house when you were just married, no children, now you have maybe 2 children, maybe 3. You just don't have the space that you had anymore. But when you bought that house, rates were 3%. Well, you need to spend more money to buy a larger home. And then on top of that, you're going to double the interest rate, if not more. And so you're going from, say, a $2,500 payment to what would be a $7,000 payment just to upgrade the home. That's not feasible for most people. With rates making their way down, what will happen is that now they will be able to afford the step-up home. And so that will then trigger them to finally put that other home on the market. So I think 2025 is going to be a very good year. One of my expectations is obviously rates continue to slide, but I think that it has a positive impact on inventory levels. And so I get that question, why would sliding rates, more buyers being attracted to the market be good for inventory? We already don't have enough sellers. Well, people that are selling houses need to move somewhere else, right? So whether you're in your starter home and you've outgrown it and you need to step up, or whether you're an empty nester and you need to downsize, either way, you're looking at making a move into another home. Now, the problem that sellers have had with taking that step is that the rates have been so high that it's been unaffordable. So if somebody is in a large home and they need to downsize, but they're in a 3% mortgage, they could literally cut that mortgage balance in half, downsize, with the rate currently is double, if not more, than what they're paying. So it's a tough pill to swallow to downsize in home and keep your mortgage payment where it was. On the other end of that, the people that need to take the step up, they need to buy more house, more expensive, and now on top of that, they're doubling the rate again versus what they're paying right now. And so it simply just becomes unaffordable at that point. And so I think that prevents a lot of people from actually selling their home. I believe there's a lot of people on both sides, whether they want to downsize or whether they need to increase, that need to make that jump, but they just financially can't do it. What I expect to happen in 2025 with rates sliding is I actually expect inventory to get better. I expect it to get to more of a healthy point, and hopefully overall that creates a much healthier real estate market and mortgage market for buyers and sellers.